Hi, and welcome to this morning's Global View video analysis and outlook. It is currently 8:45 a.m. on Wednesday, June 29th, coming to you quite a bit later than usual because we wanted to see certain figures this morning, like U.S. personal income and spending, that came in a little bit on the light side, but also wanted to see the actual equities opening after the big recovery on Tuesday from the Friday-Monday debacle. And that was especially important. We'll get to just a bit more on the charts momentarily, but first of all, it's important to note that we had the UK Brexit, British exit from the EU, agony, and now the ecstasy? Maybe, more so equalization on the back of the process becoming a bit more well articulated, a little better view. This is not the next financial implosion and crisis upon the markets right away that drove the psychology out of Friday into Monday. We have to say, along the way, other than U.S. consumer confidence on Tuesday, the data has weakened. But it's been overrun in any event in both directions, first the agony, then the ecstasy, by the UK decision to leave the European Union. But the silver lining there is that's put the Fed on hold. That's very important. Get to the quick take. What we had was a close back up into the bigger resistance up in the low 2100 area back on Thursday on the assumption the UK would remain in the EU. Of course, all of the sharp pressure on equities in the Friday across the globe that left this opening back below 2055 to 60 and barely holding 2032 to 35. Weakness down to the top end of 2020 to 10 on Friday, and even overrunning the December trading low at 1991, from which the market back then recovered temporarily before the January weakness, temporarily back above it into the very end of last year. But with things looking more rational as of Tuesday, this market gapped higher. Ultimately, after stalling a little bit on Tuesday morning, by 10:30 in the morning or so, it was breaking up for that whole time period out above 2005. And what's very interesting is the two-thirds retracement of the whole move from Thursday's late high to Monday's low is right here at about the, let's readjust that, right here at about the 2060 area. Now, 2055 to 60 is already a very important threshold, gapping below it on Friday and stalling on the initial bounce in that area technically is what attracted more selling. So we have to figure if this market can really start to hold up back above 2063, that's what you have to look for in the near term. It might be ready to put on another test of 2100 on a bit of unsettling news, more so than outright bad news. Unsettling news on the UK overall exit from the EU is going to leave the Fed on hold. So not so much bad news as good news, as an unsettling situation, silver lining, may keep the bid back in the equities, and we've seen this in Europe as well. And that is pretty much it for the short take on the S&P 500.